Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Let me share my screen. If you guys have any questions and you're joining us for the first time, and you put those questions on the live chat on YouTube, Will's watching it. He'll read them back to me. If you want to come on a show, ask your question live. We also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. It'll prompt you to turn on your camera. You don't have to turn on your camera, but once we let you in, everyone could hear you, could ask your question direct. While we're waiting for questions to come in, we'll take a look at the pre-market report, see what's trading in pre-market hours. There were some questions yesterday left over. I think it was dealing with a stock's volume in a pre-markets, volume in a regular trading hours, how you could look up the different volume profile based on the time of day or time pre-market, regular hours, after hours. Where do you get that breakdown? So we'll take a look at that today as an example, and if there are questions, follow-up questions to that, I'll take those as well.
All righty.
So maybe I'll use, I don't know, we'll take a look at Netflix today, right? So I'll go to Netflix, we'll take a look at the volume profile, just as an example, because they didn't give us a specific stock to look at. All right. So pre-market report, these are stocks trading in a pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. I see 30 stocks made our percentage gainers list, 79 on percentage decliners. From this perspective, we're looking like we're setting up for a more bearish bias at the open. Let's filter this list down to only S&P 500 stocks. We want to take out small cap stocks, ETFs, leverage products, closed-end funds, all those stuff. We're going to take those out to get some insights what's going on in S&P 500 companies. And to do that, we're going to use the filters here. This one in ETF. If I drop it down, I get a list of different ETFs. When you select one of them, the list below gets filtered by holdings, stocks that are holdings in that ETF. So when you choose SPY, that's S&P 500 ETF. Now we've got this list filtered by the stocks that are in SPY, which are the S&P 500 constituents. Here we see 2 stocks made our percentage gainers list, 13 on the decliners. So from this perspective, still looking like a more bearish bias at the open. I think a big one here, Lowe's reported earnings looks like they're up in the pre-markets. So this is Lowe's up to 2% on 62,000 shares. Looks like if you hover over that E, it's letting us know that there wasn't earnings today before the market opened. Another big one, Target here, I'm seeing. Also reported earnings today before the market opens, and they're down almost 15%. And what they've been reporting that they've been seeing, behavioral changes in their customer base, more theft, like not a lot of good things. And I think their margins now dropped something from like operating margins dropped from 6% to 3%, growth rates down. So far in Target, I think is just a reflection of a slowing economy? What do you think?
Yeah, it's interesting. It's two different retail stories, right? In Target, you'd think, if anyone was going to do well in retail, even in a, slowing economy, it would maybe be Target. I mean, they do have a mix, right? And seems like the price point. Lowe's was, I thought, more interesting listening, and like survey going forward, they still find people very bullish about doing work around their house, things like that. Seems like in a slowing housing market would slow down.
Yeah, that is interesting. Yeah, so it could be an issue with execution here. Maybe Target has an issue with operations executions, and they gotta do some internal fixing, because that's a good point. Why is Lowe's not seeing the same problem?
Yeah, and with the rise in interest rate, I mean, I know people tend not to move and maybe do work. Maybe that's why on their home. But, when prices are falling and you see, well, I say that with peace and love. I can't say for sure I've seen prices fall. It's just my assumption that prices are going to have to fall with these new interest rates, right? At some point, you'll start to see markets down, right?
Right.
And people will be surprised to see where their neighbor just sold their house when they bought, at a different price 3 years ago.
All right. And I think that Target also carries some big debt on their books. We could take a look, but I'm not going to go into the fundamentals because I did of Target today, because I did want to talk about the volume profile of the stock. That was a question we got yesterday. So if no questions popped up, well, I'll go to Netflix.
Perfect.
All right. So right now we're on Netflix. I'm going to go over here on the price action. I'm going to go here to the VWAP page. Okay, price action VWAP. And yesterday, I think the question was, if I recall, can you see the volume breakdown of a stock trading pre-market, regular trading hours, after hours? And that's true because, if you look at the total volume of a stock, there's a lot of things going on within that volume. And it's helpful to break down the details of that volume to gain insights of what's going on, who's doing what, when is it happening. And I think I'll just use Netflix today as an example to see if we could break down that volume and get a little bit more insights. Now we're not open today yet, but I'm going to look at yesterday's volume. Okay. And in this table here, this one table shows the performance of the stock, so where the stock price was on 5 different sessions. Okay. It's looking at the change. So it looks at the previous close, so 1, 2, 3, 4, 5, right. This one looks at 6, I guess. So the one is, as a reference, it looks at the previous close price, and then it tracks from the previous close, what was the VWAP price in the pre-market, right? And in the pre-market, you're going to get volume, but you're going to get a different potential mix of traders than you do in regular trading hours. And that's because during regular trading hours, you have different rules in place. You have market maker obligations, you have liquidity providers going in there. VWAP orders are kicking in, limit order book is kicking. So there's a lot of stuff that can happen in the regular trading hours that's not happening in the pre-market. Just a simple one, mutual funds don't trade in the pre-market, right? Their VWAP orders aren't active during the pre-market. So the first look we get is, those traders that can trade in the pre-market, what are they doing? And we use the VWAP price to see where's the volume weighted average price in the pre-market, and then we could compare that going forward. Well, what happens, after the market opens? The question was on volume, and down here, we're showing relative volume. In other words, how's the volume today in the pre-market versus average daily volume in the pre-market. All right, so that's how the breakdown looks. Is the pre-market because the pre-market volume will always be less than regular trading hours usually, right? You don't get as much volume in the pre-market as you do once the market's open and you got lots of more people participating. So we separate them into those chunks, and then we compare pre-market versus pre-market volume, regular trading hours versus normal regular trading hours. Yesterday, you could see I'm hovering over it. What this is letting us know is that the volume in the pre-market was 1.2 times the average pre-market volume. So a little bit higher than the average, 20%. And if you hover over it, you could see 327,000 shares traded in the pre-market hours versus average daily volume 266. So a little bit more active in the pre-market. And what we know is that the price was up in the morning from the previous day. So previous day's closed to $299. The pre-market VWAP, 309. You could see $10 higher. So now we got, the volume and the price action to compare to. Before there's regular trading hours kicks in, there is another liquidity event, and that's the opening auction, opening cross. And what that is that there are a bunch of orders in the morning that don't trade in the pre-market, but they're sent to the specialist to get executed once the market opens. So you could have market orders, you could have limit orders, and orders coming in from both sides, buys and sells. And the specialist at the listing exchange takes those orders, tries to find the best equilibrium to get the most fills, and then has a single price auction and trades it at that price. So all the volume trades at that one price, and then the markets open up for continuous trading. In other words, then you have the market making quotes, the specialist quotes, and you have continuous trading. So the opening cross, another big liquidity event, because that's the first look we get where all the other players who can trade it in the regular market hour, that would be their first spot that they could trade, and then regular hours kick in.
Hey, D.
Okay. Yeah.
Rob just wants to check, is this available for everyone, or is this on your internal?
Let me check. I'm not sure if this is I don't know if we kicked it out yet to you guys. Let me check. Because I am still working on it. Let me see if we pushed any of it out. You know what? It looks like we didn't push it out. Okay, so we didn't push it. And I am still working on it, on the design, the navigation to it, how to display it. So I guess I did not push this out yet. This is on my internal only.
Well, there you go, Rob. Something to look forward to.
Sorry. Yeah. Yes. So no, not yet. But it will be, part of it is, how do we display it? How do we explain it? And then the navigation of it. That's why this is still in my internal. Okay. But there was the question there, so I wanted to go over and kind of describe the different sessions, what they mean. Here, opening cross, we could compare it to the VWAP. So you could see here that it pretty much agreed with where the volume weighted average price was during the pre-market. Sometimes you'll get a deviation, right? So sometimes those people who are trading the pre-market, all of a sudden, at one price, that opening cross could be higher or lower, because now you got different traders that are in there, pushing their opinions, their orders in. Here, it looked like pretty much just, flat from pre-market to the opening cross. How was the volume at the opening cross? about what it typically is. So you could see a little bit higher. Yesterday, 97,000 shares traded at the open versus an average 87,000. Okay. Regular hours, we see the regular hour VWAP very close. So from the right, so think of it like this. You got the pre-market, then you got the opening. So that's your first kick. Are they more bullish or bearish at the open, right, than the pre-market? So the pre-market's taking it up, and the opening price takes it up even higher. That would be even bullish because those pre-market buyers are already in the money. But once you get that opening, and sometimes you'll get the opening cross at a very high volume. What happens next, right? If it opens up, do you see more buyers flooding in, pushing the prices higher? Meaning that, that even at a higher price, people are still pushing the prices higher. That didn't create a resistance. So that's another way to look at it is, well, what happens right after the opening cross, especially if it's on high volume? Did it hold and run? Was it a resistance? So people are using those points to get that type of insight. You could see here regular hours, VWAP kind of stayed steady. It actually did Netflix stayed steady the whole day. And the volume was about average, right? A little bit even below average for the day. You got 12.1 million shares traded during regular hours versus an average daily volume, 12.9. Nothing there that's significant. Then we go to another big liquidity event is the closing cross. And this is, again, the closing cross is a single price auction. Okay. It's a specialist accumulating trade orders that want to fill at the closing price. And there are certain institutions that they need that closing price, like a mutual fund, right? Mutual funds, that's how they create and redeem units, is their NAVs based on closing price. There are other institutions that will need it as well. Some depending on how they calculate their NAVs, or if they're redeeming or creating units of other things, could be an ETF even. So it's a big liquidity event, and what will happen is that the specialist is getting these orders to get filled, at the closing price. He'll get buys and sells. Sometimes there's an imbalance. If there's a big imbalance, you'll get broadcast 15, or I think it's 10 minutes, either 15 or 10 minutes right now on the consolidated tape. So a big imbalance will show up. And the reason they broadcast that imbalance is that they're looking for the other side, right? They're saying, hey, there are a lot of buyers, we have an imbalance. So if you wanted to sell a big block of stock, you can do it, or the other way around. That gets broadcast, I believe, like either 10 or 15 minutes before the close. And it's really, the aim is to find liquidity to the other side. Once the specialist gets all these orders in place, he comes up with a price to close it at. Sometimes if there's an imbalance, he'll have to either buy to add to his inventory or sell out of his inventory if he can't match it up with the orders coming in from the marketplace. But this is also another big liquidity event, and it kind of gives you insights. What are these institutions doing? Where they're, and you could kind of measure the last minute uptick, downtick to get a sense of where there's more buyers or sellers, right? Because if there's more buyers, that last minute will probably close up on an uptick, because the specialist, if he's participating on it and he has If he's selling, it has to be on an uptick. If he's buying, it has to be on a downtick. And we look at the volume too. Sometimes it could be very significant, right? Sometimes if there are a lot of orders coming in, that volume could be very significant at the close. So another big liquidity event yesterday, we see 839,000 shares traded at the closing auction versus average 469,000 shares. That's 1.8 times its typical volume at the close. All right. Once it closes, then we go to after hours. And after hours is similar in a lot of ways to pre-market. You don't have the same players that you do in regular hours. You know, those VWAPs and stuff, they're not already active, that are filling like these institutional mutual fund orders. You don't have the same market making obligations. You don't have the same protections, same liquidity. But you have after hours, people are trading in there. You know, sometimes it could be news after hours that people are reacting, and you'll have trades going up in the after hours. And this is tracking that volume. Yesterday in the after hours, we had 591,000 shares traded versus average 495,000. So a little bit more active in the after hours. We could see really the VWAP was pretty close. So it was pretty steady yesterday, all day. Okay. So that's kind of a breakdown by session, right? We have pre-market, opening, regular trading hours, closing, after hours. Does that make sense to everybody so far? Let's take a look then at another breakdown. Now this breaks down the volume by what type of exchange did it trade on. So there are lit exchanges, and then there are dark pools. So we separate those two. And when we look at it, you know, why that's significant. Dark pools, they're like private exchanges. Okay, so dark pools, think of it as it's controlled by, it could be controlled by any broker dealer could create one, right? Could have Goldman Sachs could have one, Merrill Lynch could have one, and they're running their own private matching engines for their customers. It's trading off exchange. It's not trading on the lit market. The reason they were created was to be able to hide from view the intent of their bigger customers. So their bigger customers, instead of putting their big limit orders on the lit exchanges where people could see the size of their, you know, buy or sell side, they created these dark pools where you can't see their intent. It's handled by an algorithm, so nobody knows until there's an execution. But besides those big orders that they're trying to fill for their customers, and really they're trying to match up a lot of times big orders with big orders, right? If they can match them up, that'll be great, because both of those players did not have to show their hand until they got the execution. There are other players in those dark pools as well. There are liquidity providers in there, professional traders providing liquidity to those customers. And typically you'll also see retail orders going into those dark pools. And the reason is that the retail orders add up to a lot, right? If you're putting in a lot of retail orders, at the end of the day will add up to a lot of volume. And if a big order throughout the day could get executed against a lot of retail orders, it's going to add up anyway. And retail orders themselves are considered non-informed orders. In other words, most retail orders are not research based, right? They're not going in there and doing some kind of intense homework to get, an edge over somebody, like a high frequency trader can. So the idea is that if you could capture the retail orders in your dark pool, the more you capture, the more desirable it is for people to go in there and get their executions done. Because the one thing they don't want to do is get run over by a high frequency trader that knows, something ahead of time, a little bit earlier, that the market should be higher or lower, and scoops you, right? Because that's a big loss. And those private networks usually do not allow those types of high frequency traders inside their dark pool. Okay. The lit exchanges have no choice. Those high frequency traders can access the lit markets. Those are public exchanges, so they cannot prevent high frequency traders that are plugged into information or have faster systems, or have an edge over you where they know, well, the market should be higher. These, whatever they're doing, reading the futures, reading news, whatever, and they're going to scoop the book. They're going to take the limit order book, and those people who had those limit orders are not going to be fast enough to cancel them. They're going to find out about the news 5 minutes later, so they're really out of money, right? You have your limit order out on the exchange. News comes out. That's it, right? You're exposing yourself to what they call adverse selection, right? So your limit order is you're sticking your neck out just in case something happens. You're not going to be quick enough to pull your limit, until the stock goes higher. So those are like some of the differences between dark pool and lit exchanges. We see yesterday, 57% of the total volume during regular hours was on the dark pool, which means there's plenty of liquidity there that these players did not have to go and access the liquidity in the lit exchange. The more you have in the dark pool, the more liquidity it is. If somebody needs something, they need to get it done and they can't do it in a dark pool, then they're forced to go to the lit exchange. And that's not ideal for them, because if you need to buy a lot of stock, once you go to the lit exchange, right, you're moving the markets, because the lit exchange, that's what the market follows, the lit exchange. If the market on the lit exchange is moving up, then the prices are moving. I'm going to stop there, Will. It's almost 9:30.
Great job, Dima.
Yep. All right. Well, everyone, thank you for joining. Maybe we'll continue on this tomorrow.
When do you think this will be pushed out to the community?
I'm not sure yet, because we do have a lot of other work to do with this before I push it out. So I'm not even sure where to put these reports, or if I'm going to have one big report or have them separated into, different tabs. I gotta think about it, because, there's a lot here to throw out at one time. And, to me, the data makes sense because I know what I'm looking at and I know internally what we're looking at. I also have to push it out there so it starts to make sense for you guys as well. I don't know I don't have an estimated time right now. I'm not sure.
Perfect.
Yeah, I don't know yet. But
All
I'm
right.
working hard to get it out there as fast as I can. But I don't want to say it, because I feel like if I do and I can't deliver it, people are going to be happy.
All right, Dima. Thanks so much. Thanks for all the chameleons for joining. You guys have a great day. We'll talk later. Bye, D.
Yeah. Thanks, everyone. Have a good trading day. Hope to see you guys tomorrow.